Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, January the 5th, 2026. The U.S. stock market has been closed for close to an hour right now. I am admittedly a little bit behind on getting this recording done for you today. And a note to those individuals who are newer to the program. On most days that the market is open and trading, this presentation will in fact be available about 30 minutes after the market closes. I'm behind today because I was getting the Signal newsletter put together and doing a few different things with that, as well as taking care of a couple of other issues that came up during the holiday. By the way, thank you everyone for being very understanding as I did not do any podcasts over the majority of the holiday break. I stayed tuned into the market. I was active on Discord. We were still sending out trades and adjustments as needed. But I did take that little bit of time off from doing the podcast, and I appreciate your patience in that. All right, lots to cover today. This might be a little bit longer podcast than normal. Most days, these podcasts maybe go 10 to 15 minutes, occasionally 20. We could be a little bit longer than that because there is a lot of stuff to cover today, and I'm going to do it as efficiently as I can. Really quickly, before we jump into any of that, let's just recap what happened today. The Dow a couple of times today was up well over 600 points, but it finished up close to 600 points to the upside. S&P up 2/3 of a point, as was the NASDAQ, right in the neighborhood of 2/3 of a point to the upside. Good start to the first full trading week of the new calendar year. I know last week, Friday, kind of an off day for trading. New Year's Eve day, the 31st, not such a great day for trading. But the reality is, I didn't expect much on those days. I will admit, I thought that the markets would be more bullish than they were. I think we have a couple more days to technically figure out if we have had a Santa Claus rally or not. I would say probably not. I don't feel like we've really had a Santa Claus rally because those last couple of trading days of the month of December were just not that impressive. And I guess it really depends on how you define a Santa Claus rally. I'm not going to get into the weeds and talk about whether we really had one or not. Some people say if from December 1st, which is right here, if from the 1st of December to the last day of December you were bullish, and we were just barely, some people would call that a Santa Claus rally. Other people say it's the last 5 trading days of the year and the first 5 trading days of the year. So the last 5 of 2025, the first 5 of 2026. So there's still time, I suppose, to technically move into a Santa Claus rally, if that's the definition you want to use. Again, I said I wasn't going to get into the weeds. I'm already doing it. December overall, pretty flat, a little tiny bit to the bullish side, but pretty flat. That's okay because I think all we need to focus on is what happens from here on. And I think the future is very bright. I think we're going to have a good couple of weeks as we get into earnings. I think earnings are going to be strong. Guidance, I think, is going to be strong. I personally think we're going to have a good first quarter. At some point this calendar year, 2026, I think there will be at least one good size correction, 10% or more from recent highs. But I think we will hit a handful of new highs prior to any type of a correction. So I think we're looking at a very positive first quarter. That is just my personal prediction. All right. Like I said, lots to talk about. So I'm going to try to be somewhat systematic in how I talk about this. Probably the first thing I need to jump into after that little bit of a market cap and a little bit of a prediction for the upcoming year is we picked up a number of new members during the holiday season. For those of you that are brand new to the program, welcome. We're glad to have you as a part of the Safe Option Strategies family, and I think we do consider it a family. Be as active as you can on Discord when your schedule permits, when you're able to. If you have any trouble getting onto Discord, make sure you reach out to me. I think I've seen everyone who signed up new during the holidays introduce themselves on Discord and get signed up on there. Get on Discord every single morning. I'm usually on about an hour before the market opens, sometimes a little bit earlier than that. And I watch Discord throughout the day. I'm usually done around the time the market closes until the next morning. Not always, but I'm usually kind of done because I like to have my time in the evening and my time with my family and to do some of my other interests. But even then, I still pay attention. If someone has a real pressing question, I'll probably jump on and answer it. But be as active as you can on Discord because a lot of what we do, we publish there before we send out emails and before we formally put things on the website. And Discord is exclusive to the paying members of the program. I make this podcast open to everybody who wants to watch it. Anybody, whether they're a member of Safe Option Strategies or not, can watch the podcast. And I do that to help promote the company a little bit. But Discord is where you're going to get the information that is exclusive just to you and what we're doing as members of the program as paying. Okay, so let me show you what I did with last year's trade tracker and with this year's trade tracker. And in order to do that, there's 2026. Let me get the 2025. Okay, this is specific to the spread trade tracker, not as much for the triple play and the collar trade tracker. I'll show you why. Okay, going into the end of the year and the beginning of this year, we had several trades that were still open. So we opened this NVIDIA trade at the end of last year. Well, towards the end of last year. We opened this Amazon trade at the end of last year, and we opened this Walmart trade at the end of last year. And sadly, they were all three down, although all three of them have come back pretty nicely and pretty dramatically already. These are all trades that are longer term that I am completely okay carrying into this calendar year. But in order to track our year to year net ROI, we have to make a decision. Do we continue any positive from this trade or negative to simply accumulate or take away from last year and not count it as part of this year? Or since it's open in our portfolio, do we count it as part of this year? My answer to that is both. And this is actually the first time I've done it this way. So this is reflective of where we were on December 31st, 2025. Okay. We were down in NVIDIA, we were down a lot in Amazon, and we were down a little bit in Walmart. So I have factored those into our net gain or loss for the calendar year that started in 2025 and I'm ending it in 2025. Now, admittedly, that is a little bit different than I did last year because last year we had this trade specifically on AMD and this trade on Palantir that were opened at the end of the year. And we counted a big chunk of this profit from Palantir in 2025's results. So I did it a little bit different last year, and I kind of determined that's not the best way to do it. I can't go back and change it from then. I guess I could, but here's the thing: if we took out this profit that we got on the Palantir trade and counted it all towards the year before 2024, we still ended with a really phenomenal return in the calendar year of 2025. An amazing year that we still ended. If I'm going to do that, I would technically have to do this and count this in the previous year, and we go up even a little bit higher. So look, it's different than I did last year, but this is what I'm going to do every year going forward. So I'm well aware that a Palantir trade that opened in 2024 accounted for a lot of the profit that we're showing in 2025. But I could show all of that profit for 2024. 2025 would still look phenomenal. 2024 would look much better than it did. I want to get consistent in the way I'm doing this. So what I did was um, I took the profit or loss that we showed on December 31st, and that's what I counted as part of our net return for 2025. As a result of doing this, any profit we gain on these trades, any profit we gain on these trades will in fact count for 2026. So what I did was the NVIDIA trade, I simply reset our um, where we got in to reflect exactly where it was trading at the open of the market on the second. So this is a reflection of where it was at the open of the market on the second. So anything that Nvidia gains on January 2nd or today, January 5th, and going forward, this will be reflective in profit that we will count toward 2026. And then I, of course, did exactly the same thing with the other trades with Amazon, with Walmart, and with APLD. Now, the interesting thing with APLD, we were up a tiny bit at the very end of basically on December 31st. We were up a little bit. So I'm counting that $60 of profit in 2025. We're up even farther on the second and today and at a really, really nice profit. And now that I've explained what I did with the SOS spread trade tracker for 2025 and 26, now let me tell you what the plan is with APLD, Applied Digital Corp. We have earnings being reported not tomorrow, but Wednesday, the 7th. Whoops, let me put the right ticker symbol in there. We have earnings being reported after the close of the market on Wednesday. There is absolutely, at this point in time, no need to stay in this trade and run it through earnings. And here's the main reason why. If you look at the way we've got this trade set up right now, the stock price is trading well above the 27.50 strike price of our short call. I think APLD is going to have a good quarter. I think they're going to have I think they're going to set expectations going forward higher. In other words, guidance outlook, I think, is going to be increased. And I think you're going to see this stock take off back towards $40 a share. But I don't know if that will happen or not. That's what I think is going to happen, but I don't know if that will happen. And because I don't know if that will happen, we don't want to take a chance that between now and expiration at the end of this week, that APLD falls back down close to $25 a share. So we're going to take the profit that we have in it, and tomorrow morning at the open, we are going to close APLD. Even if they open tomorrow a little bit to the downside, we're going to take whatever profit we have and we're going to get out of the trade. Okay. We still have an open collar trade. I sent out an adjustment. I'm going to talk about that in a minute, but it would absolutely not make sense on this type of a trade to stay in it and run the risk that we give up this nice profit that we have. And if APLD falls, I think they will fall a long ways, but I'm not sure if they'll fall as far as 2250. When we opened up the trade, and this is, I'm taking a little more time to explain this because I know there are some new members that have not done an in the money bull call spread with us before, or excuse me, they have not, that's the new trade we put up. They have not done a long iron condor trade before. When we got into this trade, APLD was trading right here close to 25. And we had a good feeling that in a week and a half to 2 weeks before their earnings report, they would run up to and above 2750, which they're already above now, or they would fall and come all the way back down to 20. And if they were still trading really close to 25, if they were still really close to 25, I would tell you that after that earnings report, good or bad, they would jump way above 2750 or go way below 2250. But the fact that they're clear up here at 30, they could have a bad earnings report and it could just knock them back down here to 25. And that's what we absolutely cannot afford to have happen. Is there a chance that in Thursday and Friday's trading, they could come down even farther and still be down around 20? Absolutely, there is a possibility of that. It could certainly happen. I don't want to take that chance in 2 days of trading that they'll drop all the way back down to here instead of just a drop down to around here. So it just makes sense to take the money and get out and call it a nice booked profit and let it be our first closed trade of 2026. We'll basically color this in green. We'll show a very nice profit for it. I'll put in the exact numbers tomorrow, but assuming they open tomorrow flat or a tiny bit to the upside, as long as they don't open way down tomorrow. Now, if they do, if Applied Digital opens way to the downside tomorrow, I might do something different and you will know about it on Discord. Be watching Discord at the open of the market tomorrow. If they do something way different, if tomorrow they're down $1.50, $2, and they're down closer to that 27.50, we might adjust a little bit. We might do something a little bit different and give them the rest of the trading day tomorrow and Wednesday to see if they end up back down around 25, or if we can get out with still sufficient profit that we're saying, okay, maybe it's not the 18% that we're showing right here, 18.23%, but maybe we still get out with 15%, and I would still take that win and jump out without hesitation. So the plan with APLD is if they open flat to up tomorrow or a little tiny bit down, 10, 15, 20 cents to the downside, I think we're still in great shape. We'll take the profit. We'll get out of the trade. If they open way down tomorrow, we're talking $1.50 to $2 to the downside at the open tomorrow. We'll rethink this one and maybe stay in and let it run through earnings. Okay. That's our spread trade. Now let's talk about the new spread trade that I opened. I spent a lot of time looking at different things and thinking about this today. And all the while, I knew that Caterpillar was having a really, really good day today. And if you've already read the Signal newsletter, and hopefully you've read not just what the new trade is, but you took a look at what the reasoning was behind the trade. I think we made a very good case why this stock will stay at or above $600 a share for the next week to week and a half. The expiration date I chose for this trade was not this coming Friday, but the following Friday. That does not mean that I don't want to be in the trade for less time than that. My preference on this new trade, and I think I have it right here, my preference on this new trade is that we got into it. Okay, hang on. Okay, sorry, this looks wrong because I don't have my actual entry prices. If you'll bear with me for a moment. I'm going to do this off screen, but I'm going to hurry. I'm just going to hurry and punch in the actual price. Oh, wait, I'm sorry. This is, we're opening this trade tomorrow morning. I'm thinking of I'm thinking of one of our triple play trades. We're opening the Caterpillar trade tomorrow. So tomorrow I will put in these prices that it ended at today, 25.28 and 29.05. Okay. If we get filled tomorrow where things ended today, this is showing 377. I think I put a limit order of 375. Watch Discord. We might adjust that a little tiny bit in the morning. If this is trading higher than 375, I would still take this trade at 380, 385. I think it would still be a really good trade. I'd like to get filled at 375. So here's the basic premise of this trade. Again, this is a little more for the people that are brand new at Safe Option Strategies. A traditional bull call spread, is where you buy to open a long call, sell to open a short call, same expiration date. You place them at the same expiration. This would be your long call. This would be your short call. Whatever the spread is, meaning the difference between these strike prices. If this were at let's say this were at 620 and this was, let's say this was 625 and this was 620. That would be a very traditional bull call spread. But we would also traditionally put this out 3, 4, 5 weeks in time, as much as 2 to 3 months in time, with the expectation that Caterpillar continues to go up. We pay half or less for this trade as the differences in the strike prices. So in other words, if the strike price difference is $5, we would want to pay no more than maybe $2 to $2.50 for this spread, so that as Caterpillar continues to go up, we've got a $2.50 investment and a $2.50 possible return. In other words, we could get upwards of we could get up to 100% return on this trade, and we would probably set a target of 35, 40, 50%. But there's a possibility we'd be in the trade for 3, 4, 5 weeks or more. And in the money bull call spread, the primary difference is instead of starting both options out of the money, we start both options in the money. We look at 600 right here, which Caterpillar finished today $16 above that. And we say, okay, we're going to buy the 595 strike long call, and we're going to sell the 600 short call. And instead of needing Caterpillar to stay on a strong bullish run to get our profit, we only need Caterpillar to stay above $600 a share. They could go up and we do good. They could be flat and we could do good. They could even come back down and be slightly bearish over the next week and a half, as long as they don't go below $600 a share. If they stay at or above 600, we make our target profit. Now, if we got into this trade for 375, our maximum possible profit would be that 375. It would be actually, I'm sorry, it would be the $5 spread minus this 375. So our max possible profit would be $1.25. Okay. If you take $1.25 and divide it by the 375 net debit that we take to get into the trade, our net maximum return would be 33%. Okay. I'm not going to target 33%. I'm going to be ecstatic if we can get out of this trade in a week, and I'm going to be happy getting 15%. In other words, I'm willing to take a smaller net return in exchange for a greater probability that we get that return. If our maximum possible return is 33%, then the probability of getting 15% is double the probability of getting 33%. In other words, it's much easier to get that 15%. So we set a very conservative expected return. And if you take the 375 times 1.15, in other words, and maybe I set it at 20. Okay. Everything that I said still applies, but I think now that I'm looking at this, I think we actually set a 20% target return. So we actually are going to go for, I didn't go for 25%. I went for 20% based on that rationale I was just giving you. So we're going to go for a 20% return because we can close the trade when it's worth $3.50 a share. Excuse me, $4.50 a share. I'm getting tongue-tied, forgive me. We're going to go for a 20% return and get out at $4.50 per share. That's the target return. So we're going to try to get in at 375. If we go up to 380 times a 20% return is 356 instead of, or 456. Instead of setting our limit at 456 to get out, we'll set it at 456. But I'm going to try to get into the trade tomorrow morning at 375. Okay, so that's our new trade. Sorry, I got a little bit tongue-tied and was off. Everything I said still applies. It's just 20% instead of 15%. We've got a max possible return of 33%. We could go for 25 or 30%, but going for 20% is the more conservative approach and increases our probability of getting out of the trade with our target profit in just a week to a week and a half instead of having to wait all the way to the end of next week. If we're trading at or above $600 and we get to the end of next week, we'll make the full $1.25 and we would have a full 33% return. But initially, if my trade fills tomorrow morning at 375, and there's no reason for me to think that it won't, then I will immediately set a limit order to exit the trade. And I'll set that at the 350 or the 450, excuse me, 450. And then I'll have a nice profit on that trade. Caterpillar's already up a little bit in aftermarket trading. That doesn't guarantee anything for tomorrow, but already a little bit in aftermarket trading, which is a good sign. Okay, now last thing I want to talk about. Our collar trade on APLD. I sent out a collar trade adjustment with the Signal newsletter. Okay, so you all have access to that. We are rolling our short calls. So tomorrow morning at the open, I'm going to put 0106 here. We're going, and I'm going to put 0106 right here. We're rolling our short calls out. So this will be a call. We're going to keep them at the 40 strike price. We're going to move them out to December 20th. And we're going to leave the number of contracts exactly where they're at. Okay. That's the first step we're going to take. Now I'm just copying a formula here. Okay. The next thing we're going to do is buy 100 more shares. Now, let me say this for anyone who is not following us currently with Applied Digital and would like to open a new collar trade, this would be the perfect time to do it. They report earnings in a couple of days. It's just straight up a good time to get into more shares of the stock or to get into shares of the stock for the first time. Okay, it would be an absolute excellent time to do it. Okay, so we're going to add 100 shares. Now, this is the only thing we're doing that might maybe possibly stump a few people. Well, none of it should stump you. But for those of us that are already in the trade, we're adding 100 shares. We're keeping our number of short calls the same. But when we roll our long puts, and that's the last step we're doing, we'll add puts here. We're going to raise those up to the 30 strike. And we're going to add one more contract. So we're closing 7 contracts. We're opening 8 contracts. Okay. That's what is different about this trade than some of the other ones we're doing. We're going to have a disproportionate number of short calls and long puts. The reason for that is this. I already told you I have absolutely no clue what this company may or may not do tomorrow. I don't know when they report earnings if they will take off to the upside or if they'll take off to the downside. Having trouble with this. Give me a second. Okay, I don't know if they'll take off to the upside, if they'll take off to the downside. I honestly don't know. What I do know, oh, sorry, we're leaving these at 116 for the expiration. What I do know is that if they go up, I want a couple hundred shares of my stock to go up unchecked. I don't want there to be any short call that is limiting the growth of this share position on 200 of those shares. But if they fall down, I want long put contracts equal to the stock that I have so that it's all protected on the way down. So hopefully that makes sense. If you're already in the trade with us, and for those of you that are already in, you've done this with us a lot of times. You've had multiple times where you have adjusted a trade with us, and we've had a disproportionate number of calls and puts in the trade. For those of you that are brand new and are considering getting into this trade for the very first time, this is going to be your first entry into APLD. My recommendation is whatever number of shares you can afford, 200, 300, 400, 500 shares, this go around, match the number of short call contracts with the number of long put contracts. In other words, if this is the very first time you're ever doing APLD and you're going to do 300 shares, which I always recommend you don't do a collar trade unless you can do 300 shares or more. It's up to you. I'm not making an official recommendation that you buy a specific number of shares. I'm just saying my preference is I don't collar trade unless I can afford to collar trade 300 shares or more. And APLD is a very affordable stock to be able to do that. If you were getting in for the very first time and you decided to do 300 shares of stock, do 3 Um, do three of the February short call contracts and do three of the January long put contracts, respectively, at the 40 and the 30 strike price. If I was getting into it for the very first time, I would match up my share ownership exactly with my short call and my long put contracts. Whereas those of us that have been in a little bit already, I'm wanting to do a ratio. I'm wanting to add some shares, roll my long puts up, add a contract of long puts, and then roll my short calls out, keeping the same number of contracts. So wrap your head around that and message me on Discord if you have any questions about it. Okay. I have taken a long time with this. What I did not get to yet is that we did three new triple play trades today as well. Sorry, the triple play members are kind of at the back of the list with what we had to go over. I filled on all three of these, even though on the coin and the Palo Alto Network trades, I went out to the 16th for the expiration. And the AMD trade, I only went to the 9th. I am hopeful to be out of all three of these trades by the end of this week. I just was a little more confident AMD would give us a big move up or down and have either the 232.50 strike price in the money or the 225 strike price short put in the money before the end of the week. With Coin and with Palo Alto Network, I wanted to give them a little more time because they tend to be a little bit more back and forth, and I wanted to give ourselves extra time. But they're all three basically the same type of trade. I filled on all three of them. The prices that I have in here in this spreadsheet are accurate with all three of them. And I think they're a fun, fantastic way to get the new year off. Tomorrow morning, I'll talk a little bit more about these ones in terms of what these three stocks are doing. Okay. I went a long time on this podcast. I added some things that I don't normally do. One other thing, one of our members that's been with us for a little while asked if I had any type of tutorial on these spreadsheets that I use. I am in the process of putting together a new PowerPoint with some instructions specifically on how to use these spreadsheets, because any one of you can go to one of these spreadsheets, pull it up, and then go right over here to file and make a copy, give it a name. Like I might put, if I was making a copy of this, Jeffrey's Spread Trade Tracker 2026, and you can make a copy of it yourself. And then if you do more contracts or less contracts, if you do some trades that are different than the trades we do, you can still track it all really nicely in these Google Sheets, and it doesn't have to match ours. You don't have the ability to do anything other than view my spreadsheets. And that's because we accidentally had a member that I didn't restrict that to. And they went in and changed some contracts and changed their entry prices. And everyone, I had people instant messaging me saying, what happened? That's not what we did. But you can make a copy and keep track of any trades you do. You can keep track if you do different numbers of contracts than what I do. I make it really, really simple for you to do that. So I'm in the process of putting together a brand new tutorial on that. As soon as I have it within the next day or two, I'll get it out to everybody. Okay, I got to wrap up there. This was a really long podcast, and I still have to do a little bit of editing and cutting on it before I put it online. So I'm going to hurry and get that done. I hope you had a great holiday. I hope you had a great Monday. Looking forward to a great Tuesday. Thanks, everyone. Bye bye.